Hello, everyone. This is Sebastian McMahon from IA Financial Group, and here's the weekly economic review for the week ending April 22nd, 2022. So markets, again, lots of red on the screen. Inflation was very strong, so I'll be talking about inflation again today. Inflation strong, central banks pointing towards an accelerating pace for rate hikes. Of course, that means market rates were higher and bond portfolios, bond indices were under pressure. So on the week, minus 2% for the long index, and after 1 quarter and 3 weeks only, minus 18% for the long index. So that's an historical performance. In equities, TSX emerging markets under pressure, Nasdaq also, and a rebound in Europe and Asia. On the commodities side, oil held above $100 on the week. So as I said, I would be talking about inflation. So 6.7% inflation in Canada in March. We had 5.7 in February. Expectations were for 6.1% in March, and we blew past that at 6.7. But when you look at the month-over-month inflation chart, you see that that's where the concerning issues are, that the pace is accelerating, of course, from higher gasoline prices, but it's the breadth, the number of components that are accelerating that is now getting worrisome, because the broader the inflation, the harder it is to tackle for a central bank. So if you look at the goods versus services inflation chart here, so early in the year, we're expecting goods inflation to at some point peak and then come down, and services inflation to rise slowly through time through wages. But now what we're seeing is that goods inflation is back again, accelerating again, and services, we're seeing more acceleration than we expected. So again, a bit concerning to see that at this point in the cycle. So pushing central banks to be very, very hawkish, very aggressive in tackling that. So inflation expectations, that's where the meat is. So market expectations are getting higher and higher. So blue is the US, the red is Canada. And as you can see in the US, we're now above 3% for the first time since 2008. And in fact, it's the first time in many decades. So that means that the Fed has to convince the markets that no, inflation will not average 3% more or more over the next decade. It will be able to bring it within the 1% and 3% band. So that's why it's being so forceful in its language. And if you look at the expectations right now from markets for a central bank activity, so you had the Bank of Canada here. So many hikes are expected, many strong hikes, 50 basis points. We're even talking about now 75 basis point hikes, maybe as soon as June in Canada, maybe in May in the US. So we'll see how it turns out. The market now is pricing 9 hikes of 25 basis points. So that means 2.25% higher than where we are right now, and we're at 1%. So the market is pricing that the Bank of Canada will go all the way to 3.25 by the end of the year. That's probably a bit too steep. Probably we'll have the Bank of Canada hiking until 2.5%, and then probably slow the pace or just reassess, take a pause. So this is what we're expecting, but we'll see there's still a lot of uncertainty in the air. So what will follow next week in Canada, we'll have GDP for March. In February, we're at 3.5% year over year. And in the US, we'll have personal income, personal spending, and also consumer confidence. So that wraps it up for the week. ia.ca/economy, Economy and Finance 101. So new material is coming over the next few weeks. And in the meantime, you can follow us on Twitter and on LinkedIn. So thank you, and I'll see you again next week.